Today, we're talking AI stocks. The top three I'm putting my money on. These aren't hype plays, they aren't penny stocks. This is what I'm betting my financial future on. Every penny I have is invested in stocks. If I make a mistake, I lose. That's why my stock picks are worth paying attention to. My whole future is on the line. AI and tech is where I focus. It's what I know best. Lucky for me, tech has driven market returns for decades, and this shouldn't be a surprise. Even railroads were once considered technology. What's boring now was once revolutionary. That's exactly what I'm betting on here, the next wave of dominance. And let's start that off with Nvidia, a stock most people should know by now. Now, before you scream that it's overvalued or in a bubble, let me explain myself. If AI is the engine of the future, Nvidia is the backbone holding it all together. Their GPUs power basically everything in AI, from ChatGPT to image generators to autonomous systems. If there's an AI model running somewhere, odds are Nvidia is somewhere in the loop. But the real genius isn't just the hardware, it's CUDA, their proprietary software that developers use to build artificial intelligence applications. Once you start using CUDA, you're basically locked in. It's like learning a new language. Switching away is painful and expensive. And Nvidia doesn't just sell chips anymore. They sell the entire ecosystem. Networking gear, software stacks, and engineering support. They've built the AI world's version of Apple's walled garden, and it's printing money. Financially, the growth has been unreal. Data center revenue is exploding, margins are massive, and their dominance just keeps expanding. Look, the market already knows Nvidia is great, but it still underestimates how deep their moat really is. That's why Nvidia remains one of my biggest buys this October. Everyone loves to say this company's in a bubble, but I don't think it is. It's not even close to a bubble. Yes, the stock's had a massive run, but this is profit-driven growth. A bubble is when a stock goes up without any earnings, like GameStop. This isn't that. Nvidia's rally is backed by real fundamentals, and it's not slowing down. Europe is about to go all in on artificial intelligence, and that's going to be a massive win for Nvidia. More on that in an upcoming video. Now, let's talk numbers, because this is where the bubble argument really falls apart. Revenue growth, insane. 25% plus year over year wasn't uncommon. Now with data center demand, it's through the roof. Net income, up 30% year over year and accelerating. But the best part, the forward PE is only around 30. That's not expensive when you consider how fast they're really growing. Most people stop at PE, but that's lazy analysis. It doesn't factor in growth. So let's look at a slightly less lazy analysis, the PEG ratio. That's PE divided by the earnings growth rate. A PEG ratio below 1 usually means the stock is undervalued, and Nvidia's PEG ratio is well below 1 right now. Let's be conservative though. Let's assume 25% earnings per share growth, far below the current levels. And let's assume the forward PE stays constant. You're looking at roughly 205% total returns over 5 years, or about 73% upside from today's price. So yeah, some people focus on how much it's already run, but I don't. I only care about where the company is now and where it's going next. Sure, earlier buyers got a better deal, but that doesn't make it a bad buy today. The only way you see that is if you ignore the past and analyze the company's actual financial future. Next up on what I'm buying is Google. Everyone knows Google is massive, but what most people don't realize is how early we are in their AI monetization story. Right now, all these AI tools feel free. People think companies are losing massive amounts of money on artificial intelligence, but that's just phase 1. Google's treating users like frogs in warm water, slowly turning up the heat until AI is completely integrated into our daily lives. And then they'll monetize it in ways nobody's ready for. We're talking AI-generated answers with embedded ads. Personalized recommendations powered by your entire search history and AI chat history. It's going to feel intrusive as hell, and we're going to profit off it. Join me on Discord, link in the description, and let's ride this profit wave together. Then there's Google Cloud. Yeah, they're smaller than Amazon or Microsoft, but they're tied into everything we already use: Gmail, Maps, Docs, YouTube. Once AI is fully fused into that ecosystem, the levels of monetization possible will reach Black Mirror levels of crazy. And speaking of YouTube, that platform is a sleeping goldmine. People aren't just watching clips anymore. Full shows like SNL and Last Week Tonight now live on YouTube. It's replacing TV, and with AI-driven recommendations, it's only going to get more addictive and more profitable. Financially, Google's a cash machine. Revenue growth is steady, around 15% year over year, but net income is growing even faster at around 20% year over year. And with a forward PE of 23.8, it's cheap for a company with this kind of dominance. If we plug this into my valuation model, assuming 18% earnings growth and a forward PE of around 20.5, we get about 100% upside over 5 years, or a roughly 13% upside from today's price. And that's me being conservative. They've got massive scale, incredible profitability, and now a whole new layer of AI-driven upside. The market's treating Google like a mature, stable company, but I see a monster that's just waking up. Finally, we get to Tesla, the most controversial pick on this list. Most people still think of Tesla as a car company. I don't. I see it as a robotics and AI company that just happens to sell cars on the side. Let's start with robotaxis. Self-driving is finally being deployed, not just talked about. Waymo, Cruise, and yes, Tesla all have cars on the road, but only Tesla has the manufacturing scale to turn this into a global business fast. Once robotaxis go mainstream, Tesla could print cash at a level we've never seen before in transportation. Then there's Optimus, Tesla's humanoid robot project. It sounds like sci-fi, but it's real. We're talking about a company that could literally sell labor as a product. Imagine a future where you don't hire workers, you buy them. Yikes. I guess history does repeat itself. That's going to reshape entire industries. The crazy part, Tesla already has the AI data, the custom chips, and the manufacturing experience to pull it off. This isn't just a moonshot. It's a bet on scale and integration that no one else can match. I have another video where I go deeper into my full Tesla valuation, and I'll link that at the end of this. But here's the quick version. If an Optimus robot replaces a $50,000 a year worker, a company might pay about 10 years worth of labor to automate that job. That's $500,000 per robot. At a run rate of about 10 million robots a year, that's $5 trillion in revenue. With healthy margins, that gets you to around a $40 trillion valuation in 10 years. Scaled back to today's dollars, that's roughly a $10 trillion valuation. Sounds absurd, right? So did the idea of Elon Musk being the richest man in the world when Tesla was first announced. Yes, it's risky. Easily the riskiest of all my bets. And yes, Elon Musk is unpredictable. But the upside from robotaxis alone is massive. In fact, while preparing this script, I just saw the latest version of Tesla Autopilot version 14. This thing is insanely advanced, and robotaxis look like they're right around the corner for mass deployment. And then, if robotics takes off too, we're talking about life-changing money. That's a risk I'm more than willing to take. So there you have it. NVIDIA, Google, Tesla. 3 companies I'm putting my money on this October because I believe they're positioned to dominate the AI revolution. These aren't short-term hype plays or trendy stocks. These are the foundations for the next decade of technology. Each one has a unique edge, whether it's NVIDIA's irreplaceable AI ecosystem, Google's monetization engine, or Tesla's robotics and autonomous scale. At the end of the day, I'm buying dominance, not momentum. And that's why I'm confident these three picks are worth paying attention to. Now I want to hear from you. Which of these do you think has the biggest chance to dominate artificial intelligence over the next 10 years? Drop a comment below and let me know your thoughts. Thanks. Bye.